welcome back. So today I have something special for you. It's the 5 stocks that I am looking at or currently own, and 5 stocks that I recommend to look at slash watch slash buy for September. Okay, so I know this is coming late, but we're gonna get right into it, and I hope you enjoy it. So the first one is Facebook. So Facebook recently reported earnings that were just phenomenal, and since then their share price has increased from 260 all the way up 16% to over $300. And then since that time, it kind of, due to the tech sell-off, has decreased by around 10%. Okay. However, this is a company right now that has a $766 billion market cap with only a P ratio of 34, which right now seems high, but due to the earnings growth or due to the growth of Facebook, does not seem so high, especially when compared to something like a Shopify, which has like a P ratio, I believe, in like the hundreds or even thousands, right? So we look at some of their stats here. Facebook, right now, as I said, market PE ratio of 32, and it beat in the second quarter of 2020, it beat estimate by 41 cents, right? So they earned $1.80 in actual in earnings with an estimate of $1.39, right? And so as you can see, since 2016, they've just been growing their revenue and earnings tremendously. And of course, due to the pandemic, their earnings slightly decreased in 2019, right? So if you look at their quarterly results, they actually earned more in second quarter of 2020 than in the first quarter, from 4.9 billion to 5.1 billion, as they're adjusting to the pandemic. And also their results or their performance was also affected by boycott on Facebook ads, as many companies like Starbucks were saying that they did not take away hate speech and etc. So they boycotted and stopped advertising on Facebook for a month. So this affected their earnings and will also affect their third quarter performance. But as you can see, they're still growing their earnings and revenue quite substantially, despite the pandemic. And if we can see when we look at the projected growth for Facebook, so for the current year, they're expected to grow at 13.40%. As compared to 2021, they're expected to go at 24%, right? So this definitely more than justifies the high PE ratio of Facebook. And I was able to buy the stock back when it was like $170 around here. And it has been just a beast for me. I'm up over like 60% on this position. And I continue to holding it. And I think it definitely will be the next $1 trillion company, just in terms of Instagram. Now they have Reels, which are similar to TikTok. They have WhatsApp, right? They're moving into sort of more cloud computing slash virtual reality stuff, like their vision goggles, right? So not only do they have Facebook, Instagram, Messenger, WhatsApp, they're also looking to advance other sides, right? And so I think Facebook might be the next sort of big thing, big $1 trillion market cap, right? So again, even when we look at their earnings, we're just going to give this a little bit of time to load. You can see that year over year, quarterly, they went from $14 billion in revenue to $17.4 billion in revenue just quarterly, as compared to a year ago. So total revenue increased by $2 billion, as we can see from this line right here, which is an 18% increase. And this responded to net income of over 100%, as we can see here, right? So from 2.4 billion to 4.9 billion, which is just absolutely huge. And also their daily active users went up, right? An increase of 11% year over year. And monthly active users increase of 10% year over year. But I believe daily active users is more of a reasonable number, just because that's where they're getting most of their revenue from, is the people that are using Facebook, Instagram, WhatsApp daily, right, from advertising. So this is definitely a growth company that I plan to hold. And the next one, also sort of a growth company, but smaller cap and involved in the retail side of things, is Foot Locker. So you can see the year to date, it has been tremendously impacted by COVID, where it decreased by like 60%. But then since that time, it has increased from like $18 to $33, as we can see here, right? Just an absolutely insane rip upwards. Okay, and they also reinstated their dividend, and that was due to good quarterly earnings. So we can see here, they beat income by 2 cents from 69 to 71 in the second quarter, which is insane considering the whole pandemic. All stores had to shut down, and so that they were actually able to have net income of 45 million is huge in this time, right? And that they're able to do it in such short notice. And I mean, we'll see what happens when people already spend their stimulus checks and stimulus checks are not coming in anymore. But at the same time, it's still an earning beast, and they have such a good business model. And just some highlights from Foot Locker's earnings, and it said it earned 45 million or 43 cents per share, down from 55 cents a share a year ago, but that was pre-COVID. You know what I mean? So it earned 71 cents a share on revenue that rose 17.1% to 2.8 billion. Right? So, and of course, beating analyst expectations. And so there's this really cool thing up here when you go on analysis. You can see exactly what they're projected to grow. And of course, for the current year, their projected growth is -8%, but then already expected to be in positive returns for next year in 2022. Okay, but I wouldn't be surprised if they actually didn't do -8% in revenue, but closer to like 0% or break even from last year. So again, another stock that has, despite the pandemic, being able to put up good numbers and show up where it counts, right? The next stock is more of a value play, and it has been absolutely destroyed by the pandemic. And this is a pharmaceuticals company, sort of like a convenience store mixed with like a pharmaceuticals company. So if you live in Canada, this is the equivalent of a Shoppers Drug Mart. Okay, so as you can see, in the past month, has decreased by 17%. Even if you look at the 6-month chart, sort of even worse, from like $46 all the way down 24%. So and mainly here, it has a really nice dividend yield right now of 5.4%. Of course, if the stock goes up, this dividend is going to be decreased, and has a market cap of 30 billion, so a relatively large market cap. And I just really like this as a value play. And it has, of course, like even the year chart has been down from $58, now down like 39%. So I think it is incredibly undervalued. And I think Walgreens is just a company that, although it's being hit by the pandemic, it's adjusting to it, and it actually posted better quarterly numbers in the second quarter. And I believe this is also a stock that I currently own, and I believe it'll do good things in the future, and that this downtrend will not last long. And it is an undervalued company, but a good growth play. Sorry, a good value play. The next company is called Canadian Solar, and this is one that I'm not invested in yet, but I just started looking at it. A very, very small market cap of 1.7 billion, incredibly tiny PE ratio. So although it's a growth stock, this is a company that I believe has the potential to do huge things in the renewables sector. And part of the reason is, one, right now all the hype is going into renewables, right? You look at something like Tesla, huge investment in solar panels, electric vehicles in general. A lot of pressure from governments and from investors is to start investing smartly and in renewables. And I believe that with a P ratio of 6, this is just a steal, right? And as you can see, the 6-month trend has been upwards. So huge increase, over 100% over 6 months. However, if you look at the 1-month trend, and especially the 5-day trend, it has decreased by 11%. And so why is that? Well, the reason here is why, I'll just wait for this page to load, but it pretty much decreased, or it's converting its long-term debt into equity for other investors. So pretty much, as you can see, so yesterday, and this was posted on September 10th, so yesterday, after the close of trading, the company announced that it will float 200 million worth of notes due in 2025, so debt, and it's going to convert that into common stock, right? And so, I mean, this is a very small company, but right now doing this will dilute shareholder value, right? So what he wants to do is use that money to fund general corporate purposes, which may include the expansion of manufacturing capacity, development of solar power projects, and working capital. And I also think that this company is looking to use some of its income to make their own solar farm so that they can sell the electricity that they generate to utility companies. So generate like a steady flow of income that can be paid out to investors, right? So I think this is good news. But basically, what happens now is that this 200 million, um, it converts to when this converts to equity, it basically dilutes existing shareholder value by nearly 11%, right? But I believe this is necessary in order to grow the company. So I just think that it has a huge potential, especially since this is one of the bigger solar companies, and there's like a huge backlog of orders of solar panels. So this is one that I'm looking to build my position of, especially since the price declined by 13% in 5 days, right? Um, and finally, the last stock is Planet 13, and this is involved in the MJ space. It trades on the Canadian Securities Exchange, and the reason why it does this is because it's just a very, very small company. As you can see here, only $360 million, and this is in Canadian, by the way. And I just recently added to this position because I see it has such a high growth potential. So if we look at some stats, it doesn't have a price earnings ratio just because it's not profitable yet, of course, but the growth of this company is expected, as we'll see here, is insane, right? So it's expected to grow for next year 83% sales, right? And it just has one store right now out in Nevada, but it's building up and planning on opening up um, more stores in the near future. So I think right now it is definitely justified, as a 300 million market cap, and especially since when MJ becomes legal federally, this will definitely have a huge impact on boosting their sales. And I think it's only a matter of time, especially if Biden becomes president, that this will also just enhance the play of MJ to get legalized, which will obviously help Planet 13. And of course, Canada already has it legalized, but I think the U.S. is going to follow this route just because it's extra tax money that the government can bring in, right? And if we look at their annual results, as you can see, like tremendous revenue growth from 2018 to 2019, from 21 million to over 63 million, and of course, their earnings are negative just because they are right now still expanding, right? But if we look at their quarterly performance, we can see that despite the pandemic, they made a lot of money when they opened up, and even now, even though there's less total traffic, they're still earning quite a bit of money in the second quarter of 2020. But they did lose quite a bit. They lost 4 million in the second quarter of 2020. So again, this is I think for me, a good growth play, and I'm just holding just a few shares around 600 Canadian worth, and seeing how it does. But I'm definitely very excited for the prospects of 83% revenue growth year over year, right? And I've held Canadian MJ stocks before, but I think this is a unique opportunity because Planet 13 is sort of like a specialized type retail for MJ, right? So I do think that this is where the MJ market is moving into more specialized, into more niche areas. So it's sort of MJ is looking not to be attractive not only to teenagers but to sort of the higher echelon, the higher class, especially when there's like less stigma surrounding MJ. So, anyways, these are the 5 stocks that I have already bought or I'm looking at. The stocks that I do not own at the moment are Foot Locker and Canadian Solar, but I am planning on increasing my position, especially if these stocks drop even lower. Okay, so thank you for tuning in. Please give this video a like and subscribe if you haven't already, and have a fantastic day, guys.